Hello guys, welcome to a Trading Parrot. Although general markets have confirmed a weekly breakout, I remain cautious about the market, and in today's video I'm gonna show you some revealing patterns based on cycles, seasonality of general markets and how they can affect crypto as well. This cycle has a very specific anomaly that I'm currently tracking, and I'm trying still to figure 100% how is this anomaly going to affect our transition into a potential bear market eventually, whether it's going to be a sharp transition, a slow and stealth one, or if we're actually going to continue getting overextended for an unknown amount of time, which by the way, I think is very unlikely. In today's video, we're going to talk about the NASDAQ, the S&P, and I'm going to show you some patterns that I'm secretly tracking in my charts, and today they're going to go public. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. If you want to trade Bitcoin, altcoins, cryptocurrencies, or if you want to trade the S&P, NASDAQ, gold, commodities, and even Forex, nowadays you can use Bybit from most places in the world, including Europe. By opening an account with the link in the description, you can get rewards of up to $30,000, and by doing so, you are definitely supporting the channel. So I've been saying for a while, if we get a breakout in here, it's pretty exciting. On the S&P, we could get into a revenge rally, see new highs, then a pullback, and potentially continuation to the upside. After all, that is pretty much what's been seen in history every time that we get a V recovery. A V recovery is defined by a sharp decline that in a small amount of time, it comes back to the same price, and indeed it ends up putting a new high. And if we look to either the NASDAQ or the S&P, we're going to see all over the place these typical patterns. As you probably know, Bitcoin is pretty coupled with general markets. It's not all the time doing the same, but it doesn't take a lot of time for Bitcoin and cryptocurrencies to catch up with the trend of the general markets. I refer to the general markets as the big boss for Bitcoin, since I don't believe that Bitcoin trades inside its own bubble, as many people think out there. Let's start with the S&P. Let's first observe the existing patterns. Let's see if we can agree that those patterns are still in play. And then let's discover what is that anomaly. I promise you it's very interesting, and it's leaving me very intrigued actually, and a little bit unsettled, I will say. So you got in front of your face in here Bitcoin with three cycles that can be clearly observed. The 2017, 2021, and the current cycle that everybody's saying that is about to start, funnily enough. Let's focus for a little bit just in price action. Let's leave the RSI out of the way, and let's observe that I'm trying to identify a full cycle of a general market. Starting with the S&P, you can see that there is a low here around the 31st of August in 2015, and we end up peaking in that cycle around 10th of September in 2018. Now, there is an initial decline here that is around 12% right before the actual decline of 21%. This is what I will refer as the bear market before we restart another trend up with a new cycle. Bitcoin in this particular general market cycle peaks around 300 days before general markets peak. And at the time the general markets peak over 20% is precisely when 2017 cycle breaks this area of the squeeze and still moves down about 50% additional. Up until then, it was still holding the lows of $6,000, but eventually it manages to get to $3,000, which was really painful. And that is how coupled these two guys are. And if you think that that is just the S&P, that's not the case. We can also go to the NASDAQ, and we can see that when the NASDAQ puts around 25% drawdown, it also contributes for the last capitulation in 2018. Now there's other patterns. If we use Fibonacci from the level that we have selected as the beginning of general market rally and we do a Fibonacci retracement from the highs, we are going to find very recurrent, at least in the past 3-4 year cycles, that the bottom of general markets are coincidentally hitting the 50% Fibonacci retracement. And that is not just once, but every single time. This is the first retracement, then we get this cycle and we hit the 50, slightly overextended, but around that area. If we go to the S&P, we see the same thing. We see the peak, 50%, and we resume. Then we have another cycle, 50%, and we resume. If you have an eagle eye, you're probably already seeing where is the anomaly, and if you do, good for you. If you don't worry, don't feel offended. We are gonna go through that. It had me for at least half an hour scratching my head trying to make something out of the pattern that we can interpret and actually have a stand on what we think is gonna happen after. Before we go into anomaly, let's leave that for the cherry on top of the cake. But before that, let's focus on the RSI. After all, I do a lot of things with just the RSI. First cycle on the S&P, you can see that it climbs on the 2 weekly chart consistently above this RSI trend line. It's not the perfect touch, but it's clearly the trend to the upside. Then we peak at 88. That happens with the maximum momentum of the RSI, okay? Take note of that. That 88 is very close to the actual peak of Bitcoin. So we could even say that people were looking at the S&P and thinking, once the S&P peaks, I'm gonna, rug pull my Bitcoin. And maybe many people thought that way, and that created a blow off top. So the blow off top of the momentum in the NASDAQ and the S&P coincidentally are very closely separated by a few days, maximum weeks apart. Then we have the second cycle in here. This is the 2021 or into 2021. And when the RSI peaks the second time in here, the highest it gets, that is the top of Bitcoin too. After that, we break down, we retest the breakdown, and we go deep into a bear market. Notice the anomaly in here. That's not the one I'm referring to, but there is an anomaly within that cycle too. And that is pretty much caused by the COVID Black Swan event. If we ignore that anomaly, we can still use a support trend line and say that the cycle will get hit really hard, but it carry on kind of holding along with this trend to the upside. Still eventually meets that peak on the RSI, Bitcoin peaks together with that, and then we go into a bear market. And this is something extremely crazy. The past cycle, we have this anomaly in the beginning of the cycle. We had it in the year of the halving, where pretty much everybody starts getting bullish that the bull rally is incoming. It didn't have enough strength to postpone the cycle or cancel it, but it took the blow of top from it. That is kind of the punishment that we had in here. We didn't have a full blow of top like we had in this area in here with Bitcoin and the RSI applied to the S&P. We go into bear market and we do this once again, third time in a row, bouncing and bouncing and bouncing and bouncing. And here's the thing, guys. Here's the thing. What's going on here? Think about it. We already broke this, and you're going to say, yeah, but we already did it in the past. That's normal. That happened in here because of Black Swan event. Well, what's the Black Swan event in here? Tariffs? Geopolitical tensions? War? Well, call it whatever you want, but we are kind of having now this anomaly at the end of the cycle during the topping year. And this must have deep, profound implications for the price, for the behavior of the cycle, just the same way that we had them in here. They're going to rhyme, but they're not going to be the same ones. And our task in here, in this video, or in the short term, hopefully, is to figure out what are going to be those. Now, focusing a little bit closer now on what's going on with the price together with the RSI on the S&P, we can extend this in a similar way for the NASDAQ, but let's do it on the S&P first. let's introduce the shiny new anomaly. This is the anomaly. 50% bear market, and we restart a new rally. We had in here an anomaly mid-cycle, fine, we still achieved that final target, and we went into a bear market. 50%, start a new cycle. Where are we here? Well, this looks to me like we kind of enter a bear market. We hit that 50% already, and we have recovered already. What the hell is going on? But there is a caveat. There is a big difference. What is that difference? Well, this we did it very early, and we reclimbed the line, and we kind of went back on track. For what? For finding a top and ending that cycle, which we actually did. But in here, we are doing it at the late stage of the cycle. If we didn't have this, we will be now doing a blow of top right here, kind of mimicking what we did in a clean cycle, that there are no anomalies. If there were no anomalies, we will have our thing there, we will break down and go into a bear market. But instead of that, we were taking away that behavior, and now we are in a context of meeting with this as a new resistance. So all spotlights should be on this moment where we meet with the lost support. Are we going to behave like the anomaly of early cycle where we reclaim the lost support and we continue like nothing into the end of the cycle? Pretty much, if we do so, we should be expecting to see the RSI to reclaim this and still put a top somewhere in there, and then eventually going down, like if not, this never happened, pretty much like we did in here, right? Or scenario number 2, we find this, we climb very humbly there, and we enter a bear market right after. Timed where? Well, August, and that's just around the corner. And that's why I think it's definitely worth appreciating this pattern, particularly if we put the resistance right there. So we have a confluence of this descending already channel with bearish divergence, very clear ones, and then an ascending resistance meeting at a very crucial point of around 66 value of RSI on the 2 weekly time frame. You can also do this on the weekly. It looks a little bit more noisy. The 2 weekly kind of clears the pattern. I am not being picky and finding a time frame where this happens. It happens across multiple time frames. It's just that the 2 weekly happens to make it better for the naked eye, if you want. So I'm gonna go to 2017 and say, well, here we have already a depression, but that depression never went into the 50. Is this one that went into the 50, and that resumes the upside with a new cycle. So if this 50 was to play out like the previous one, and we were about to start a new bull cycle, which is what the Fibonacci is calling for, then we should be seeing this to carry on for another 3 years to the upside. Or unless we are about to see another drop into here. Another option is that the price carry on slightly higher. Let's say we get into 675. And now let me move now the Fibonacci to here, in which case from higher, that 50 should put a low that is a higher low relative to this, thanks to reaccommodating the Fibonacci top. So however I place it now, it's clear to me how uncomfortable it is to watch this as a pattern, and there's always the option to say, well, I'm gonna give up and I'm gonna ignore the pattern, let the market decide. But you know how obsessive I am with patterns, and I really want to make up some of this to understand what's next. I'm tempted to say that 66, 67 there is something I won't be able to sleep and close my eyes, because I really want to know what happens when we get to that point. Whether we get a big crash from there, a correction of 20% in general markets, or actually it will be really weird to see the S&P to carry on after 67 and start putting new highs and reach levels of RSI of 88 like we did in 2018. Of course, it's possible. The question in here is how likely is to do that after having lost this level, particularly considering that after we did this, we lost the blow of top. So what is now the implication of having lost this? I don't know. Yeah, and if you're curious, on the NASDAQ, we have the same effect. Cycle 1, breakdown clean, no levels lost within the whole cycle, and we reached the 50%. 2021, the very crazy cycle with the COVID Black Swan event in here, eventually a breakdown, and now this cycle that shows that we are well ahead already on a channel to the downside. You can see the channel to the downside here entering bear market. You can see this one entering in here. And now you can see this one on the NASDAQ as well, at the cost of multiple consecutive bearish divergence to push lower and lower. Of course, NASDAQ could break this trend line and go all the way to have a final revenge against 80, which definitely is going to put a lot of upside into the NASDAQ. But again, NASDAQ so far has already come down into the 50. I am extremely curious what you make of this information. So I want to know, is this pattern worth to continue watching? Do you have a preference for the outcome out of all of the ones I mentioned during the video, or you have your own theory about this? And that's the part I would like to hear your opinion a lot. Thanks so much for watching. I'll see you in the next one. Bye bye.